Chapter 5, Exercise 5-20, Journalizing Purchase and Sales Transactions for a merchandising company. Okay. Journalize the following transactions for Santa Fe Art Gift Shop. Explanations are not required. So on February 3rd, purchased 2,800 of merchandise inventory on account under terms 310 and EOM and FOB shipping point. Now, purchase 2,800 of merchandise inventory means this is an asset account. I purchased goods, so the asset account increased. Now, did I pay cash or I'm gonna pay later? He said it's on account. On account means I'm gonna pay later, so it's accounts payable. It's a liability account increased. Under terms 310 and end of the month. So EOM stands for end of the month. 3 to 10 means I'm gonna get 3% discount if I paid within 10 days. And I have until end of the month to pay the full amount. Okay, so on February 3rd, my entry will be inventory on the debit side. Okay, two accounts payable and the credit side. I need to leave a space. Okay, so for the credit account, now 2,800 in the debit, 2,800 in the credit side. FOB shipping point means freight on board shipping point. Shipping point means the buyer will pay for the transportation, for the freight. Okay? If he says FOB destination, the seller will pay. Okay? So if the buyer pays, it's gonna be added to the inventory cost. If the seller is paying, it's gonna be delivery expense. Now on February 7, returned 700 of defective merchandise purchased on February 3rd. Okay, so return. I returned part of the inventory purchase on February 3rd. So what's gonna be the entry? I'm gonna switch it. Okay, when there is a return, we're gonna switch it. So accounts payable will be in the debit and inventory will be in the credit side. And the amount will be 700. On February 9th, paid freight bill of 400 on February 3rd purchase. So I paid for the transportation. Again, I was the buyer here. So I'm gonna add it to the inventory cost. Since paid, it means cash decreased in the credit side. Okay, and the amount is 400. Now on February 10, sold merchandise inventory on account of 4,800. Payment terms were 1, 15 and 30. It means the customer will get 1% discount if he pay within 15 days. And 30, and he has 30 days to pay. These goods cost the company 2,400. So each time he's gonna say sold, okay, for each sale transaction, I need to record 2 entries. One for the sales price, and one for the cost of goods sold. So first of all, I sold on account means I did not receive cash. I'm gonna receive my money later. It's gonna be accounts receivable. It's an asset account increased and the debit side. So accounts receivable will be on the debit side. Now, I'm a merchandising company, so my source of revenue will be from sales, not from service anymore. I'm not providing service here. I'm selling goods, so it's gonna be called sales revenue, and revenues are credit nature, that's why it's on the credit side. So the sales price was 4,800. What was the cost for these goods? It was 2,400. So cost of goods sold will be in the debit side. I sold inventory, so inventory will go down. It's an asset account. It has decreased in the credit side because it's sold, and the amount will be 2,400. Cost of goods sold, it's like an expense account. It's debit nature. Now on February 12th, paid the amount owed on credit purchase of February 3rd, less return and discount. Okay. Paid means cash will go down. Amount owed on credit purchase of February 3rd. So if you go back to February 3rd, I purchased inventory on account, so I recorded accounts payable. Okay, so which means I'm paying my liabilities now. So my AP will go down now. So in the entry, I'm gonna decrease accounts payable in the debit side because it's a liability account. And I'm gonna decrease cash because cash is an asset account, so it's gonna go to the credit side when it decreases. Okay, now to find the balance of the accounts payable, we need to draw a T account for the accounts payable. Now on February 3rd, accounts payable was credited by 2,800, so I'm gonna credit 2,800 from February 3rd. Then on February 7th, we returned 700, so I decreased accounts payable by 700, so I debited 700 on February 7th. So now what's the balance in my accounts payable? It's 2,100 credit side. Now I want to pay this debt, so I want to make the balance equals to 0. So the accounts payable balance is 2,100. This is the debt. Now, will I get a discount or not? Let's check. The terms on February 3rd was 3% discount if I paid within 10 days. Now, did I pay within 10 days or not? From February 3rd to February 12th, it's 9 days. Okay, 12 plus 3, it's 9 days. So 9 days is less than 10. So I'm gonna get a discount of 3%, as mentioned here. So I'm getting a discount of 3%, which means I'm not gonna pay the 2,100. I'm gonna pay less by 3%. Okay, so if I'm the buyer and I'm the one who's getting a discount, I need to decrease the inventory account because the inventory is recorded at 2,100, but I'm not gonna pay 2,100. I'm gonna pay less, so I need to decrease the inventory account by 3% discount on 2,100. So 2,100 times 3%, it's gonna be 63. So this is the discount amount. So the cash will be the difference between 2,100 and 63. So I'm gonna pay 2,037. This is the cash I'm gonna pay. Okay. Now on February 16, granted a sales allowance of 100 on the February 10th sale. Now please pay attention to this part. So he's saying that it's a sales allowance on the February 10th sale. So these two are related. Okay, 16 and 10 are related. So sales allowance means what? Means the goods while in transit, they were damaged. Okay, so I'm not gonna get them back from the customer. Okay, he's gonna keep them in his warehouse, but I'm gonna give him an allowance, which means I need to decrease the accounts receivable for him. Okay, so if it was sales return, if he returned the goods to me, I need to switch both entries on February 10th sale. I need to switch accounts receivable to sales revenue, and I need to switch cost of goods sold to inventory. Okay, but if it's sales allowance only, I need to switch only the first entry, not both of them. Okay, so I need to switch only the first one. So accounts receivable will be in the credit side because I need to decrease it. And sales revenue, I want to decrease it. Instead of debiting this account, I need to debit an account called sales returns and allowances on the debit side. Okay, it's a contra revenue account, which is debit nature, and it decreases your revenues, and the amount is 100. If it was sales return, I need to switch both entries because I'm gonna get my inventory back. But for the sales allowance, you're not gonna get your inventory back, so no need to increase your inventory. Okay, now last transaction on February 23rd, received cash, which means my cash will go up from February 10th customer in full settlement of their debt less the allowance and the discount. Okay, so cash will go up, he said, from February 10th customer. So on February 10, I recorded accounts receivable on the debit side. So I need to decrease it now because I'm receiving cash. So accounts receivable will go down on the credit side. Okay, I need to draw a T account for the accounts receivable now. Let's see the balance in my accounts receivable. So on February 10th, accounts receivable was debited by 4,800. So 4,800 in the debit side from February 10th. Now on 16th, accounts receivable has decreased on the credit side by 100 from 16th. So what's the balance that I need to receive from this customer? It's 4,700. I will receive cash, so I want to make this balance equals to 0, so I need to decrease it. So accounts receivable will be in the credit side by 4,700. Okay, and I'm gonna receive cash, so cash will go to the debit side because it's an asset account and it's increasing. Now, will I receive the full amount or I'm gonna receive the amount after discount? So let's check if the customer will get a discount or not. Okay, the sale was on February 10th. I received cash on 23rd, so after 13 days. Now let's go and check the credit terms on February 10th. Can you see here? He's gonna get 1% discount if he paid within 15 days. He paid within 13 days. So 13 days, it's within the discount period, within 15. So he's gonna get a discount of 1% according to the credit terms mentioned on February 10th. Okay, so since he's a customer and he's getting the discount, it's gonna be sales discount on the debit side. This is a contra revenue account. It decreases your revenues. It's debit. Okay, the sales discount will be only 1% of the 700, which is 47, and the rest will be received in cash. So for 700 less 47, it's gonna be 4,653. Now let's go back to February 12th. Okay, I'm paying within the discount period. So it was accounts payable in the debit side because I'm decreasing AP, and it's a liability account, and I'm paying, so my cash will go down, and it's an asset account, and the discount amount will be decreased from the inventory account. Okay, what if I paid after the discount period, after the 10 days mentioned here? What's gonna happen? I'm gonna pay the full amount, which is the 2,100. So my entry will be AP to cash. Okay, if it was after the discount period. Okay, it's gonna be AP to cash, and the amount will be the full amount, which is 2,100. Okay, now on February 23rd, I received from the customer within the discount period. So my cash went up, my accounts receivable went down, and sales discount will decrease my revenues because I'm giving discount. So it's contra revenue for me. Okay, now what if I received after the discount period? There will be no discount, so it's gonna be cash to AR to accounts receivable, and the full amount, which is 4,700. Okay, thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.